Right now, two completely different financial systems are racing to control every dollar, euro, and yuan on the planet. One is built on digital promises, debt, and smartphone apps. The other is built on something that has outlasted every empire, every war, and every financial reset in 5,000 years of human history. And the outcome of that race is going to decide what your money is actually worth for the rest of your life. Here's what nobody in mainstream finance is willing to say out loud. Everything you buy keeps getting more expensive. Groceries, rent, healthcare. And we've been told for decades that this is just inflation. Too much money chasing too few goods. But here's a different way to look at it. If you price oil, wheat, and copper in dollars over the last 200 years, the cost curve just goes up forever. But the moment you price those exact same commodities in gold, they've actually been getting cheaper by roughly 0.8% every single year for over 2 centuries. Same oil, same wheat, completely different picture. What that tells you is that inflation isn't really about things getting more expensive. It's about the measuring stick, the dollar, getting smaller, quietly, consistently, every decade without fail. The entire system was built on one assumption: more people, more workers, more borrowers, more taxpayers. Every generation slightly larger than the last, feeding more energy into the economic machine. And for 230 years, that assumption held. If you strip just 41 companies out of the S&P 500 right now, the remaining 459 are essentially flat. The entire market rally of 2026 is one single trade: AI. Meanwhile, certain legendary investors are sitting on hundreds of billions in cash, more than at any point in their careers. Consumer confidence just hit its lowest recorded level since tracking began in 1952. And for the first time in modern financial history, central banks have moved gold above US Treasury bonds as their #1 reserve asset. The signals don't lie. Something is shifting beneath the surface. For decades, the way gold was traded in Western markets was essentially a sophisticated shell game. When you bought gold through a bank or financial institution, most of the time you weren't buying actual gold. You were buying what's called unallocated gold, a paper promise that somewhere, in some vault, there was metal with your name on it. Except there wasn't. Not for everyone. Banks were selling vastly more gold promises than they had physical gold to back them up. By recent estimates, for every $1 of real, physical gold sitting in a vault, there were roughly $9 of paper claims sitting on top of it. That's not a system, that's a Ponzi scheme. And it worked as long as nobody tried to collect all at once. But then, countries like China started doing exactly that. China has been importing gold at a pace never seen before, purchasing more than a quarter of everything the world mines in a single year. Over the past decade, that cumulative total has crossed 14,000. In 2021, the Bank of International Settlements, the central bank of all central banks, changed the rules. Banks now had to fund their gold positions with real capital. The paper shell game became too risky, too expensive, and too exposed to continue at scale. And when the most powerful financial institution in the world quietly changes the rules around gold, you should ask yourself. The US dollar has its own plan for survival. It's called the Clarity Act. The idea is to rebuild the entire global payment system on digital rails using stablecoins. Digital dollars backed by US Treasury. Every major corporation becomes a mini central bank. Every consumer on a smartphone who uses a digital dollar to buy anything is indirectly funding the US government. It's the old petrodollar system, rebuilt for. It's brilliant. It's also not neutral. It's a mechanism for exporting US monetary policy to every corner of the world, whether those countries agree or not. That's why the BRICS alliance spent the last decade building alternative payment infrastructure. That's why physical gold has been moving from west to east at a pace never recorded in modern history. That's why central banks globally are choosing gold over US Treasury bonds for the first time in living memory. Two systems, two very different bets on what money means in the future. Analysts who track these macro shifts outline 4 possible outcomes: a geopolitical confrontation the East has been preparing for, a third world war over trade imbalances, a slow economic loss by the West similar to historical empire, or a controlled repricing where gold rises high enough to rebalance global trade, the dollar weakens enough to revive manufacturing competitiveness, and the debt resolves itself through asset repricing rather than. Three of those four paths are bad. One of them, the institutions appear to already be positioning for. The question isn't whether this transition is happening. The data says it already is. The real question is which side of it you want to be standing. If this opened your eyes to the financial game being played around you right now, share this with someone who still thinks inflation is just about groceries. Because the truth is far bigger than that. Drop your thoughts in the comments. I read every single one. Hit the like button if this gave you a new lens on the world and subscribe.